Today, one of our listeners wanted us to talk about tax compliance. How to be tax compliant in South Africa. All South African businesses, whether they're small businesses, they're big, have to be aware of the importance of a tax compliant status. But also as individuals as well, we need to be aware of what the expectations are around tax and what we're supposed to pay, when we're supposed to pay. So a listener has asked that we talk about tax compliance in South Africa. So we've invited Thamsanqa Msiza, who is a senior tax consultant at Tax Consulting, who is going to guide us through this conversation. So if you've got any question around individual tax obligations, you can give us a call on 011-883-0702. You can also send us a WhatsApp voice note on 0727021702. Thamsanqa, thank you so much for making time for us. Good morning.
Good morning, Clement, and good morning to the listeners. Thank you. Thank you for having me on the show.
What exactly is the importance of being tax compliant as an individual?
So the importance of being tax compliant, I think there are those usual factors or benefits, which is you avoid getting legal action taken against you by SARS, and you also avoid penalties and interest from being non-compliant. But then there's also the positive side, which is being tax compliant opens doors. It opens doors for you to secure a loan from the bank, get funding in case maybe you want to buy a house, as well as it also helps where you want to invest overseas. So it helps when you are going through the process of requesting a tax clearance certificate from SARS to allow you to move funds overseas for investment. Then there's also a relationship side to it. So as an individual where you are tax compliant, and it helps you build a relationship with SARS. And this can further, down the line, it can also assist with where you need to do a voluntary disclosure to SARS, perhaps of past taxes that you haven't paid. So having a good relationship with SARS then aids that process very well. And then in terms of from a refund perspective, where you are tax compliant, then it does make it much more easier for you to get a tax refund from SARS instead of having that process held up as well.
I miss those days when we used to get the tax refunds. Some people are still lucky to. So I saw that SARS recently said that it's eyeing all bank accounts to find people who are not paying the tax man, and experts have been warning of an increased focus on individual taxpayers through revenue augmentation to sniff out all these discrepancies in tax returns. In your experience, how are people avoiding to pay their taxes? What kind of tricks are they trying and avoid tax? Because that's what SARS is trying to focus more on now.
Well, in my experience, we've found that that taxpayers, or perhaps maybe if I can just give a bit of context of saying that, in the past recent years, SARS and the South African Reserve Bank have gotten into a common reporting relationship with other jurisdictions. And this means that where you have a South African resident who is working abroad for a foreign employer and they are only getting paid in the foreign bank account, one would presume that perhaps they can hide the funds or hide the income from SARS. And so what we're finding now is that more often than not, the individual is getting letters from the bank account that they are banking with in the foreign jurisdiction to confirm their residency and confirm their income, and this information becomes available to SARS. So now SARS now knows where your money is and where you're earning income from, and they can effectively then penalize taxpayers for not complying, not declaring their income to SARS that they're earning overseas.
Mm-hmm. There's some wealthy individuals as well. I know, and SARS actually established a high wealth individuals unit to try and deal with wealthy individuals who sometimes even underestimate their own provisional taxes, because there's a lot of dishonesty out there. Are there instances where people would often want to give a different bank account, say to a company they've offered services to. So they say, don't pay directly into my personal account, maybe pay into this particular personal account, because they're trying to work around the loopholes, or maybe pay me through to my trust. Are those some of the ways that people are trying to evade?
Well, from our experience within the firm, we have noted some of those instances. I think we are happy to say that we haven't seen such instances as a deliberate act, but sometimes as unintentional act. And unfortunately, for those individuals, we can say that SARS is now aware of the various bank accounts and the various trusts that are out there, and the beneficiaries that are linked to those trusts as well. And so by even, if I could say, by even going through lifestyle audits, which is what SARS has recently been conducting on various taxpayers, and the extent of the lifestyle audit is I don't want to even, it's not an exhaustive list, it's quite long in terms of what they can do through the lifestyle audits, but they've been able to pick out where income has not been declared, maybe, or even as you were saying, on the provisional tax return side, where interest income hasn't been declared fully, or where dividends have, or not dividends, or foreign dividends have not been included as well. So SARS is really using all functions that are available to it, all options that are available to it, to try and correlate the information and not just take everything on face value.
So when you want to ensure that you are tax compliant, and you look at the processes you have to follow, sometimes people feel it's a tedious process. Can it be simplified, or are people just hating just the admin around just being tax compliant and ensuring that you submit your returns, etc., etc.?
I think, well, if I can answer it from two perspectives. If we're talking about a individual who has simple tax affairs, and this is an individual who is earning employment income from a South African employer, they are contributing to medical aid and they are contributing to a retirement fund. It's most likely this information has already been submitted to SARS by third parties. In other words, the employer has submitted your IRP5 to SARS, your retirement fund has submitted your contributions to SARS, as well as the medical aid has already made your contributions also available to SARS. And so if you're this kind of an individual, and you don't have any other income, you are most likely going to be auto-assessed. That means SARS is going to prepare a preliminary tax return for you, and all you need to do then is, with the certificates that you get from your employer, from your fund, and from your medical aid, all you need to do is you take those certificates and verify that information. And if everything is okay, you click submit, and you're done with your submissions for the year. Conversely, then there's those people who are complex, who have complex tax affairs, and that tends to be the high net worth individuals, the residents working abroad, as well as non-residents working inside South Africa. Unfortunately, because of the nature of these individuals, their income, as well as their income that needs to be cleared, as well as exemptions that are available to them, and maybe foreign tax credits that they could possibly claim, make the return complex. So it's best that those individuals approach a tax professional just to make sure that their tax returns are submitted astutely and that there are no underestimations that could lead to penalties and interest.
What happens if you haven't declared an additional income? Maybe you've got gigs that you do, maybe you are in the arts, the creative industry. How does it work if you do these odd jobs where you are getting paid, or maybe there's just like a freelance gig for about 3 months? How does that work? How do you become tax compliant in that?
So individuals who are entertainers, or maybe they are independent contractors, they've got gigs that they do, they would be expected to submit their tax returns as if they were sole proprietors. So they'll still submit their income on personal income tax return, and then deduct whatever amounts are deductible from that income, and then submit that all on e-filing. I mean, submit that all on their tax return. But over and above that, they will also be required to register as provisional taxpayers. And provisional tax is a mechanism that allows the individual to pay the taxes in advance. So, in other words, for the current tax year, that we are in, which is the 2025 tax year, right now that freelance individual is earning income. They are incurring expenses as well while they're earning that income. And what they will then do during August this year is they will put together all that income, as well as deduct whatever expenses the Income Tax Act allows them to deduct, and then multiply that net amount by 2 to forecast for in terms of where do they think they will be at the end of February next year, and calculate the taxes on that forecasted, on that estimated taxable income. Now, those taxes, only half of the taxes will be payable in August. Then again, they will repeat this process in February, in other words, but now in February they're going to use actual amounts. So all the amounts they've been earning since the 1st of March 2024 until the end of February 2025. There we go, yes. And then again, calculate what the tax liability is there, minus the first tax payment they made in August, and whatever is the difference, they'll pay that as the second provisional tax payment. So in other words, they're paying the taxes in advance, and when the 2025 tax return becomes due, and this is most likely it happens in July. So let's say SARS announces that the tax season opens July 2025, then they will reconcile their income on the 2025 tax return. In other words, they will declare that they will calculate the income, calculate the expenses using actual amounts, and then the tax liability will be calculated on the net of the two, and whatever taxes they've paid in advance, which is the provisional tax, will be offset against that liability. Now, where they are sitting where they've overestimated the tax liability during provisional, they'll have a refund. But where they've maybe underestimated a little bit, then they'll just have to pay a difference. So it kind of helps from a cash flow perspective, as well as it gives us some assurance that the taxes are not just left until the last minute.
Yeah. Let's go to some questions from our listeners now on 011-883-0702. The WhatsApp line is 072-702-1702. We're talking about individual tax compliance. How do you become tax compliant as an individual in South Africa?
Hi, good morning, Clement. My serious pain with SARS is if you've got another income stream and you go to SARS and you declare and then you ask them, guys, this is what I'm going to be getting from the other income stream. How much should I be putting aside, or how much should I be paying to you every month so that I don't find myself in trouble with SARS? This guy, they say they don't know, make your own discretion. They don't even give you any form. They don't even tell you, or maybe waste their time to do some calculations around with you to can tell you how much you should put aside. They say they don't know. But surprisingly, when you do your returns, they tell you that you are owing. So yeah, that is my serious pain. I wish something can be done about that. This is Johnny from Joburg.
Thank you so much. Thamsanqa, is there no arrangement that can be made? Because there are people like Johnny who just want to pay in advance. I know you mentioned that you can do it in August and another time, so twice and do it. Is there no way that every month, so if someone has an additional, freelance job and they're getting paid monthly, is there no way that they can make an arrangement to, once they get paid, they take what belongs to SARS to avoid a situation where they're also tempted to use that money because they're waiting for the next time when they can make their returns?
So Clement, unfortunately for Johnny, perhaps it depends in terms of perspective, but the mechanism that is available is the provisional taxpayer mechanism. So it's not just only for people who are freelance or independent contractors. It generally applies to any income where there is no withholding tax on it. So, for example, as Johnny was saying, he is employed, he's earning an employment income, but also on the side, he earns additional income. be it interest income or maybe from another freelance side gig that he has, he would be expected to go through the provisional tax process, that is, calculating his tax liability at the halfway point of the tax year in August, and then paying half of the taxes then, and then again in February. What I could probably, what I can additionally advise Johnny, that what Johnny can do is that if he can get in touch with a consultant or a tax professional that can assist, they may be able to then maybe use estimates and estimate what the liability would be at half year. In other words, in August, maybe they could try and do an estimate now, and then give him a rough idea of how much you could put aside on a monthly basis. This isn't, it's not the best answer, but hopefully it will assist him to try and work out his cash flow.
Okay, thank you so much for that response. Here's another voice note.
Good morning, Clement and the team. I just wanted to find out, man, if you're getting like a 50,000 or whatever amount as a girlfriend allowance or a boyfriend allowance, if there's such, does it also need to get taxed, or is it just a free for all?
How does that work, Thamsanqa? Whoever is sending that, surely, hopefully, they've met their tax obligations. They're just gifting you and blessing you. What are your obligations then, if that's a constant allowance that you're getting, a boyfriend or a girlfriend allowance?
I think, first of all, let's first define what would be considered income in the hands of the taxpayer. And we have to look at the definition of gross income, which, if I can just paraphrase, we're talking about amounts received not of a capital nature during the year of assessment. And not of a capital nature, by that definition, what I mean is it would be amounts that you receive often linked to services that you would render, or for a the English eludes me, pro quo, for exchange for something that you have done, whether it's goods or services that you have been able to offer or render. Now, in terms of girlfriend allowance and boyfriend allowance, looking at just on a surface level, on a high level, looking at just what the definition is, or what the payment entails, it's most likely going to be for like the maintenance of an individual. As I think you mentioned, now you said something like a gift that has been given. And so that it becomes capital in nature. It doesn't fall within the ambit of gross income. So it's not gross income. Therefore, it wouldn't be taxed under the individual, the person, the recipient who's receiving it as gross income. That said, and I'm not saying that this would definitely apply. One needs to also just be cautious of whether donations tax applies. Donations tax is paid by the person who donates, and that is when there's something that you donate to an individual, then you, the donor, are going to be charged donations tax. So that is just something you need to keep in mind. And I'm not saying that will automatically apply to boyfriend allowance or girlfriend allowance. There is even an exemption in terms of the provisions to donations tax that say that if the amount is for the maintenance of an individual and of a reasonable amount, obviously, then it would be excluded from donations tax. But obviously, I must put that disclaimer. We need to look at for each case. We need to look at the facts very carefully.
Sure.
Good morning, Clement, and to your expert Thamsanqa as well. I wanted to find out, I'm in a situation at the moment where I'm helping my dad rent out his place, right? He bought a place late last year, and because of various reasons, he now has to rent out the place. So from next month, he will be getting a rental income of 26,000 on that property. But he still pays bond, and there's other expenses as well. So that 26, if it comes into his bank account, his personal bank account, it will now put him in a higher tax bracket. I wanted to find out what are the tax implications on the 26,000 rental income, considering that he also pays a bond from that rental income.
Okay. Thamsanqa?
So if I'm understanding the question correctly, we're talking about an individual who is renting out a property,
Yes.
and to acquire the property, they went to the bank and requested for a loan. So they are still paying back.
They're still
that
paying the
loan.
bond, but they're renting out the place, so they get a rental income of about 26,000.
Okay. So, firstly, I think what we need to clarify here is that in terms of rental property, when an individual is renting out a property and they're receiving rental income, they will also be allowed to deduct any expenses that are linked to that rental property. And one of the expenses that comes to mind in this scenario is the interest expense, the interest charges that the individual is paying on the bond repayment. So in other words, I'm not talking about the capital portion, but rather the interest expense that they're incurring. They'll be able to offset the interest expense against the rental income that they're receiving. If they're incurring any other expenses such as rates and taxes, perhaps if there are levies, they will also be able to offset those expenses against the income, and so that in effect, it will reduce the taxable rental income that the individual is receiving. But over and above all of that is that individual who's receiving the rental income, it will probably be best that they register again with respect to the provisional tax conversation where they register for provisional tax and calculate what is taxable halfway through the year and pay half of the taxes then, and then again at the end of the year pay the taxes then. So in terms of remitting the taxes, it's through the provisional tax mechanism, and then and based on what is taxable, it will determine which tax table they fall under. Hopefully, I've answered that question adequately.
Let's play the last one.
Good morning, Clement and the team. I just want to find out, I recently got retrenched, and when I was retrenched, I got my lump sum. I also got my my retrenchment package, and then I got my provident fund. However, on the calculation that the provident fund it gives on the retrenchment package, it gives a certain percentage. Also on the retrenchment package, it gives a certain package that if your retrenchment amount is below 500,000, you get a certain percentage of tax. When I looked at what I was taxed, it was extremely high and more of the salary kind of deductions. How do I go back to SARS? I tried to call SARS. They said I must fix it when I actually do my the July process. I don't even have a clue how to do that. What is it that is required of me to actually claim that tax that I think was actually deducted, or does that now come back to me when I claim my tax? Sorry if I'm on long.
Thank you. Thamsanqa?
Okay, so in terms of retrenchments and retirement lump sums that are getting paid out, there's a different tax table that applies and different rules that apply. Now, in order to answer her question, I think best I try and briefly explain these rules. When an individual receives a lump sum, let's say a pension lump sum for a particular tax year, the taxes that are calculated on that lump sum it's not just a matter of taking the lump sum and applying the relevant lump sum tax tables, which are quite beneficial. They are not the same as the individual tax table. Just to give you an idea, they max out at about 36%. So they have their various levels. So I think it's 18%, then I think there's 27%, somewhere there about 36%. But to calculate the taxes is not just it's not as easy as just taking the lump sum, the current one, and multiplying the taxes. Unfortunately, the tax calculation for the current lump sum is affected by whatever past lump sums that were paid out, and this is both severance and retirement or withdrawals from a fund. And what I mean by that is that whenever SARS has to decide the amount of taxes to withdraw from the current lump sum, they will look at your past lump sums and calculate a hypothetical tax, and then they will add the past lump sums to the current lump sums, and then calculate another tax. And then the difference between the two becomes then the taxes they will withdraw from the current lump sum. Effectively, what this means is that 550,000 rand threshold that the caller is referring to, it's a threshold that is kind of, it's a once-off in a lifetime. So if you have ever once received a severance or a previous lump sum, pension lump sum, or a withdrawal, you have eaten up some of that threshold. I mean, that 550,000 right now, you've eaten some of it or all of it up, and then that's what's creating a higher. That could be the reason that's creating a higher tax. What the caller, I think what probably is advisable, what they can do is that on e-filing, SARS has put a mechanism or a function available where a taxpayer can check their past lump sums and use the lump sum tax table to see if the calculation that they've received from their fund makes sense. And hopefully, if they are betting, then perhaps again they can get in contact with a professional,
tax consultant to assist.
Yes, and see if they can just recalculate that. It's not.
Yeah, Thamsanqa, we have to stop it there because I'm completely out of time. But thank you. I think that was a comprehensive response to that question. Thamsanqa Msiza is a senior tax consultant at Tax Consulting.